welcome everybody. Happy Monday. Welcome to the closing beat. Hope you had a great weekend. It was a very, very relaxing weekend, actually. I was kind of stuck. I couldn't get a lot done because of all kinds of random limitations. So I made the best of it, tried to enjoy some time around the house, got a few things done, so I'm pretty happy. Also happy the markets are higher today. I'm sorry it doesn't look so good, but if you look at this little guy right down here on the bottom, that is the chart of how the markets perform throughout the day. I'll try to sharpen that up for you a little bit, see if we could find a better chart provider for that. But basically, the markets finished the day higher. So if we take a look, the Dow was higher by 40, really thanks to Disney. We'll go over that in just a minute. That broke to new highs, added about 2% on the day. The S&P 500 gained 10 thanks to advanced micro devices, Facebook, another one we'll go over in a minute. And the NASDAQ climbed 47 with the help of T-Mobile and, of course, Facebook. So we'll review that. If you're one of our customers, tomorrow night we are going to review the debt portion of Nest Egg. Just a quick overview. I always try to keep it really short. Tomorrow, I can promise, will be really short. If you can't make it live, no worries. When you get the email with the link, oh, we got to send that out, by the way. When you get the email with the link, that'll just have the recording. Maybe 5-10 minutes at most. Tomorrow will be a quick one. Just want to show you some of the features in the new Nest Egg. By the way, it's time to move over to the new Nest Egg. If you haven't already, let me know. I'll get you set up on that one. But look, as far as the markets go, earnings. Really, earnings continue to be the big driving factor. You've got over 80% of the companies reporting earnings that have come in better than expected, and that includes today, by the way, or after hours here today. So if that stays the same way, right, the companies that have reported earnings so far, 80% of them beating expectations, if that stays the same, that would break a record going all the way back to 2008. So to give you an idea of how aggressive the markets are moving, they're obviously doing well. Earnings per share coming in with growth at about 24%. Wall Street, remember, was only expecting 20%. So we'll put that kind of on your radar. We mention that every few days. Wall Street sort of set the bar high at 20%. We're at 24%. But let's be honest here. A lot of it has to do with share buybacks. And you're going to hear more and more about this as we go through the month of August. Typically a slow news month, so you'll hear more and more about this. Companies this year are on track to buy back $1 trillion worth of shares. Think about it. Company has excess cash flow. They can either pay it out in dividends to investors, some of them are doing that, or they can take that money and buy shares back. Now, if it's a banking stock, they actually have to get approval from the Fed to do that. So you hear that about once a quarter, actually. But all the other companies can buy back shares of their own stock. What that means is all the available money they have, they go into the market and they repurchase shares, thus causing a little bit of a fake sort of support in the market. And we're seeing that constantly. So if you're looking at the stock market, you're wondering, like, all these stocks are beating earnings? They're beating their earnings per share because there are less shares available because the company bought back some of their shares. So a little Monday morning education for you. Not all of this is the company performing at 100% because you're out there buying stuff from them or they just have greater sales or whatever it may be. So a lot of it is share buybacks. The way you can tell, you've got companies like, what was the one today? Zillow. They beat on earnings per share. I wonder why. Well, their revenues missed. So overall revenues were not what we expected. That's where you start to see, like if you go back and look at all the companies that reported earnings, if they really beat on earnings per share, chances are it had something to do with the buyback that they've been in the process of doing. So you got to look just a little bit more under the surface to not fall for those sort of things. Okay, well, let's go over to the charts here today. Let's take a look at a few things. First of all, you got the Dow on the screen here, just moving ever slowly higher. I will point out again, if you look to the bottom of the chart, these light gray lines that are sort of in the background, they're supposed to be like an afterthought. Notice how they're trending lower. That is the volume per share. So, not volume per share. That is the volume traded throughout the day. So all the buys and all the sells get calculated in here, and it gives you basically a number of shares that have changed hands. Now, in this case, this is the actual index, so this is a little bit different. But what you have here is a slow, slightly trending higher Dow, very, very slow. But because the volume is moving lower, you see that as we look at each individual day, some of them aren't so big. They're just some small up or small down days, nothing too crazy. We actually haven't had a really volatile day since back in June, June 25th. was our last real volatile day in the markets, and a lot of that's just summertime activity. You know, it's just totally normal to see that happen. So the Dow continuing, just a nice slow uptrend there. Let me take a look real quick while I have you here. Your worst performer in the Dow is IBM. That held you back today. The Dow would have been probably higher by another 0.25%, about 0.2% if IBM would have kicked in today, but it didn't help out. Your best performers in the Dow were Disney. So Disney's got earnings coming up tomorrow. And man, it is just killing it lately here. So really kind of a tough one. If you're trying to buy Disney now and you got earnings coming out tomorrow, it's like, yeah, do I buy that or not? That's a tough one. I'd say avoid it. DuPont, earnings as well. Some positive news there. This one's sort of undecided, but it added 1.5% today. Pfizer on fire in the biotech space. Just killing it. Really, really strong there. And then, of course, you have Cisco and Nike coming in the last place there, or some of the better performers. In the Dow, you only had 7 names that were down on the day, but because IBM lost that 1.13, that sort of held you back. These things happen, you know. Okay, let's go over here to, there we go. The S&P 500 continues to push forward. Remember, the only number that anybody cares about is the all-time high. The NASDAQ broke above the all-time highs. If you paid attention to the news, it was like, yay, back to new highs. They'll do the same for the S&P 500 if it happens to get over this number right here that I'm highlighting on the chart, which happens to be 28. We'll call it 2880 to really make it official. And then in the NASDAQ, we're almost back to all-time highs today. The NASDAQ added 0.5%. We'll go through some of those stocks here in just a minute, looking pretty good. Let's start with Facebook. Awfully gutsy for Facebook, in my opinion. Facebook is trying to work with banks to gather more information on you so that they can use it in a beneficial way, or so they say. I think the timing's a little bad for that considering what they just went through, but investors love it. Why? Because if they can get that information from you, it means more revenue. It means more and more that you might use Facebook Messenger for different transactions. Ultimately, I think they'd like it for you to be able to connect to everything and actually make transactions and things like that. So investors loved that today. The stock was higher by 4.5%. It's obviously got a long way to go to recover everything that it lost from earnings, but that's the news on the stock today. It is back above the 200-day moving average. Kind of interesting, I think, on that one. I believe that will not be the last you hear of that. It might kind of stay in the headlines throughout the week, if you were to ask me. Tyson Foods, so that one was up by 3.25%. What did we say the other day? When a stock downtrends, you don't try to pick the bottom if you're a trader. You try to pick the bottom when it falls off the edge or when it starts to look like a waterfall. And so we pointed out this Tyson was slowly trending lower and now has fallen off of a waterfall there. Well, it helps when you get a little news as well. The company reported earnings better than expected. Overall profits were higher thanks to a decline in cattle costs. Who would have guessed it, right? So they're paying less for their cattle, and so therefore they're able to squeeze a little bit larger profit. They needed that, man. They needed a good day like this. This will now entice the technical traders to come take a shot at picking the bottom and see if this thing can go back to 64. So not a recommendation, of course, on my part. Just kind of get used to seeing the same things all the time on the charts. Cardinal Health actually finished down on the day by 0.5%. They reported earnings better than expected, revenue better than expected. That helped. The only negative was their profits in the pharmaceutical sales. Those declined because generics. People were going after the generics. They weren't going after their brand names. So that hurt them a little bit. The stock is down by, I believe, about 20%, 18% on the year. So Cardinal Health not looking too good. You're going to see Pepsi in the headlines today. Pepsi was up by 1%. The CEO was leaving. She is one of only, I believe, 3 women that were CEOs in the S&P. I think there's only 2 left now. She's stepping down, moving on. Shares were higher on that news by 1%. Not too bad. Hey, what about SeaWorld? Do you know SeaWorld was a public company? So they went through some troubles a couple years back. They've obviously recovered. SeaWorld announced earnings. A couple things that really stuck out to me from their earnings report. Very impressive earnings, very impressive revenues. They mentioned that their attendance in their parks was increasing. Why would their attendance be increasing? Well, because they're not keeping the shamu in the tank. Like, nobody liked that, and they were kind of mad that they were keeping a big fish in the tank. So they got rid of all of that. But in place of that, they had to spend a ton of money, man. So SeaWorld here in Orlando just built a massive roller coaster all over, all the parks. They've got all these different roller coasters opening. They gave some more timelines for that, by the way. If you have a SeaWorld in your area, you might want to look that up. They talked about when the new rides will be opening in all the different locations. So they're spending money on that, and because of that, people are like, all right, you did the right thing. You know, you got rid of the big fish in the tank there. We'll ignore the seals and all the other stuff for now. We get that, but 17% on the day. Well done, SeaWorld. Okay, as far as sectors go, there were only 2 sectors that were in the red today: real estate and telecommunications. Now, I bring up telecommunications because you know how we talk about the tech and banking stocks being important, right? So we'll always say if the market is going to be higher, you got to have tech and you got to have banking stocks. Well, here's the thing. The tech sector makes up about 25% of the entire S&P 500. Well, the other day when the Facebook was falling and Amazon and Netflix and all of those started falling, people went, wait a minute, tech is playing too big of a role in the overall S&P. And so the S&P committee, I don't know what they call themselves, the S&P committee, the index committee, got together and said, we got to do something about this. What are we going to do? So check this out. The telecommunications sector includes like Verizon, AT&T, things like that. They are now going to call it communication services. And so they're going to move names like Facebook and Alphabet into that sector, and therefore the tech sector will have less weighting on the overall S&P. Really? We're just, aren't we moving it over here versus here? I mean, it's still in the S&P 500, but so that you can't say the tech sector is weighted too heavily, they're changing that effective this month. I believe pricing starts in about a week or 2, actually. So we will have the updates on that, of course, because that's going to change how we talk about tech stocks and the banking stocks. We're going to have to look at it a little bit differently here. I'll probably be doing a video on that to go over how the new sector breakdown goes for the S&P 500. Kind of cool. Okay, let's go back over to the charts real quick because here's some earnings you got. You got Zillow. We talked about Zillow. They beat on earnings, but they miss on revenues. They're going to buy a company called Mortgage Lenders of America. I don't follow that space, so I can't say I am well educated in that space. But the stock is lower now by, oh boy, look at it, all the way down here. I don't even know what that means. All the way down by 48.50. So a huge loss on Zillow, about 9%, I guess, if you were to do some quick math. Etsy, if you follow that company or if you sell stuff on Etsy, that stock is higher after earnings. Let's see how high now. 46.20. There we go. Breaking out to new highs there, Etsy. So they reported earnings much better than expected. Things are looking good there. The question is value. Like, how do you value this company? They're sort of unique. And so I'll bet you anything the analysts are going to be talking about whether that's an appropriate valuation or not. And I don't know. It's a unique company. So I get it. It's online, retail, and everything, but it's so much more than that. So that is typically the argument. Like, is the company worth that much? I mean, it's a very pricey company if you follow fundamentals on this company. So I don't know. Figure out what you think. Twilio. Honestly, I have no idea what they do, but Twilio is some sort of tech thing or app or whatever. But they're higher by 11% after hours, and then Weight Watchers down 10%. No Oprah Winfrey effect here. That stock is suffering pretty badly after hours, down to 8. No, not so bad now. Down to 89. So it recovered a lot of its earlier decline. It lost basically 10% right after the earnings came out. Starting to do a little bit better now. I'm just looking real quick to see if there's anything else that we want to bring up stock-wise. Hertz Rental Car, they reported earnings. There we go. Hertz Rental Car down 1% after earnings. Not so bad. Did an interesting video on Hertz and Avis one time to compare the two. THC, Weight Watchers, and that's about it. Yeah. So I think we pretty much covered it for today. Let's see. Did we do Facebook? Yeah, we covered it. Why would a stock go up if the CEO steps down? That's not always the case, is it? Usually the high-profile CEOs, that's when you see things suffer a little bit. On a stock like Pepsi, remember, it's just like politics. You've got half of the board that probably wanted change and half of the board that didn't. And so likewise, you have half of the investors that did and half of the investors that do. People like to see new CEOs in these really gigantuan companies because it represents change. Remember when McDonald's CEO, the last guy, I forget who the last guy really was, but there's a new guy, been there for a few years now. He's doing great, by the way. That stock went higher on that news as well because it represents a younger, fresher face that may be able to compete with what the market's looking for. So one of my favorite activities is go on Zillow and look up luxury houses and fancy locations. Zach, I do that every night before I go to bed. I love just swiping all around the place, checking things out. Sadly, they don't make any money off of us doing that, so could be a little bit of a problem there. If the telecommunications move happens soon, how should I sell my tech ETFs now? Your tech ETFs will adjust probably within the next few days, to be honest, now that they know the specifics of it. I don't believe it's actually official yet, but as soon as they make it official, which I believe is this week, and the pricing comes in play, all those ETFs will likely just adjust. It'll happen automatically. Cloud communication, yeah, I thought it was something like that. Yeah, other than that, I don't really follow them, but that's it. Well, hey, I hope you enjoyed. We'll be back tomorrow, of course, to continue right where we left off. If I've helped you in some way, hit the subscribe button, and we'll take it from there. So we'll enjoy. Have a great night. We'll see you back again tomorrow. If you email us here in the next few hours, it's softball night for Jazz Wealth. We have a little team softball that we play, so we'll be out of the office for a few hours, but we'll be right back. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.